So we've got um, great entry point, we've got a great yield, we've got a real yield that should beat or meet inflation. And then there's the upside potential to analyst consensus forecast. Analysts for the companies that we invest in are forecasting 19% upside to their price target.
Hello, you're watching Proactive. I'm joined by Matthew Norris, the head of real estate securities at Gravis. Matt, very good to speak with you. The UK REIT sector has seen a wave of takeover activity over the past 12 to 18 months. Do you think we're nearing the end of the take private cycle, or is there still plenty of opportunity for buyers?
Oh wow, yeah, there are certainly opportunities out there. So you're absolutely right. Look, we are in a takeover wave. I think there's a variety of opportunities out there right now. Certainly, so you could say some of the smaller ones have already gone, but there's still one or two of those smaller REITs with high quality assets that could be acquired. Equally, I think, there is certainly scope in the market, and I think there's a growing desire from investors to challenge some management teams of bigger REITs to consider merge with another equally sized REIT, strip out the cost, enhance shareholder returns. So I think there's a possibility that we may see some of that in the months and quarters ahead. Equally, given where UK REITs trade, the discounted valuations, you may actually see some foreign buyers come in and snap up some of the bigger names, thinking that this is really a once in a multi-year opportunity. So the short answer is I think there's more to come.
Matt, you've often talked about the difference between price, value, and worth. Why is that distinction so important when shareholders are assessing takeover offers?
Yeah, so look, price, I think we're all familiar with that. Price is what we see on the screen every day. It's the number that jumps around. So we're all familiar with that. Value, we can get that in a variety of ways. Many shareholders look to the annual report and the valuation statements in there and say, okay, this is the value. And specifically for real estate, where we have valuers valuing the assets and we have this net asset value, I think shareholders are very comfortable with the valuation. But beyond that, there is the worth. And Stephen, that's really important in M&A situations where you have a motivated buyer that has come knocking and says, oh, I'd like to acquire these assets. And they may have a unique strategic rationale for buying it. So it could be worth more to them than the general market. And I think it's really important for shareholders to sit back and reflect. Look, a bid's come in. What's the price? What's the value? And now what are these assets worth to this motivated buyer? And then they should seek to try and achieve as close to that worth number as possible.
What's the one mistake you think shareholders make most often when evaluating a takeover offer, Matt?
Oh, well, I think they get blinded by the statements that come out. Sort of sleight of hand, they refer to a premium to price. And now the UK market, for a variety of reasons, is trading at a wide discount. The prevailing market price is low. So it's easy for buyers to show a premium to price. But then you should move the discussion forward onto the value, and then you should look at the worth. And when shareholders assess worth, they should also be looking at the upside opportunities that exist there, and think about the future, and think about, wow, what is it that the buyer's seen that maybe the market hasn't seen? So take your time, consider the offer that's being made, and think about the future and the worth of the business. So I think the mistake is sort of rushing into things and thinking a premium to price is the same as getting true worth, which is not.
Your favorite question to challenge CEOs and or board chairs, Matt?
Oh wow, yeah. So in this environment where you see bids coming in, so it's sort of a change of heart, a change in strategy. I think the question that we ask and other shareholders should ask, since you published your annual report or your interim report where you laid out your vision for the business, the strategy for the business, the outlook for the business. What's changed? What's changed for you to now say, actually, I think it's better off to sell this business? And maybe it's because the price that's being offered is true worth and is a great return for shareholders. But I think too frequently what we're seeing is, wow, it's a bit of a hard slog. So the easy route is just to roll over to the takeover bid. Well, you set out your strategy, shareholders have bought into that. Unless there's been a material change, let's continue executing on that strategy. So the ask to the management team is, what's changed?
Mm. What are your favorite areas in the UK REIT market?
Yeah, so I think, Stephen, there's probably four areas for investors to look at right now. Four areas that Gravis certainly looks at. So healthcare, the UK is an aging population. Within the REIT sector, you can find some fantastic REITs that own the likes of care homes. So Target Healthcare owns a portfolio of modern, purpose-built care homes with ensuite facilities, with high energy performance ratings. That's a really great area. GP surgeries, there's broad political support to invest more into primary healthcare. Primary Health Properties owns a great portfolio of GP surgeries and private pay hospitals. So we like that a lot. So that's a real sort of anchor of the portfolio. I think if you look at digitalization, e-commerce fulfilment centers and data centers, a lot of growth to be had there. So we still find very interesting opportunities there. If you look at generation rent, so the build to rent sector, some great platforms out there. So these are owner operators of build to rent real estate, so professional landlords. One to call out there would be Granger. And then the fourth area that we like and that we look at, urbanization, and specifically central London, which is a supply constrained market. If you walk around the West End, you won't see 30 or 40-story high skyscrapers. So it's a supply constrained market. Demand is strong, rents are growing. So healthcare assets, digitalization assets, generation rent assets, and urbanization assets, those specialists, we think there are good opportunities there.
Can you give us your outlook for UK REITs, Matt?
Yeah, so look, if you look at the building blocks right now, the UK REIT market on average is trading at a 30% discount to the net asset value. So historically, that has been a good entry point. So that's point one, the valuation argument. Point two is the dividend yield argument. A portfolio of high quality next generation REITs delivers a yield of between 5 to 6%, closer to 6% right now. So you've got an attractive yield component. That yield, really important to note, is growing. That income is growing. This is growth income, not fixed income. Historically, certainly for our portfolio, our investments have grown faster than inflation. So over the last 5 or 6 years, our distributions have grown 2 percentage points ahead of inflation. As we look out for 2026, I expect to meet or beat the inflation for the year. So we've got great entry point, we've got a great yield, we've got a real yield that should beat or meet inflation. And then there's the upside potential to analyst consensus forecast. Analysts for the companies that we invest in are forecasting 19% upside to their price target. And Stephen, where we started on M&A, if you look at M&A, on average for the businesses that we have invested in, they've been taken out at a 24% premium to the undisturbed share price. So we think, the outlook is, we view it as positive, both from an income point of view, a growth point of view, and an upside potential point of view.
Matthew, thank you very much for your insights. Great speaking with you today.
Thanks very much, Stephen.
That's Matthew Norris, Head of Real Estate Securities at Gravis.